Welcome to the Pathfinder Legacy podcast, where we help farmers, ranchers, and business owners create a seamless transition plan for the future. From retirement to ownership transfer, we protect what you've built and guide you every step of the way.
Hello, all. Welcome back to the Pathfinder Legacy podcast, where farm families turn hard conversations into real plans. It's Life Insurance Awareness Month, and today we're talking about cash value, financing, and real-world policy design with someone who is an expert in this field, Mary Jo Irmen from Farming Without the Bank. Mary Jo helps producers understand how life insurance can create liquidity for buy-sells, operating, and transition without the jargon. We'll hit what works, what doesn't, and how to avoid ownership and beneficiary mistakes that wreck a plan. Grab the policy ownership and beneficiary map in the show notes, and let's dive in. Hello, Mary Jo. Why don't you go ahead and introduce yourself and tell us a little bit more about what you do?
Good morning, Heidi. I am Mary Jo Irmen, obviously, as you said in your introduction. I am the author of the book Farming Without the Bank. And so basically what I am doing is teaching farmers how to build their own banking system, making the bank plan B really instead of plan A. And in that process, we're also creating some generational wealth because we're doing all of that through a dividend-paying whole life policy.
Okay. All right. Great. So let's talk about from the beginning, when you're meeting with clients, what kind of goals are you seeing that they have, or what needs that they're doing that you're being able to help service them using life insurance?
I'm glad that you rephrase that. Goals are not on the farmer's agenda. I did a whole podcast about how I hate goals. I'm like, don't use that word.
Yeah, not typically. It's not in their wheelhouse.
Right. Some of the things that, how did you rephrase that again? What
the
goals are
needs.
The needs.
The
okay.
needs.
Yeah.
Yep.
So a lot of the needs are, I heard something today on a podcast I was listening to of this couple that's traveled all over, from coast to coast. And they're like, all the farming is different, but all the farmers are the same. And I see that in the financial side. And I'm sure you have seen that as well, that it does not matter. The needs are going to, everything for me that I notice, it trickles down to finance. And so our needs are, how are we going to pay the bank? How are we going to finance operating? How are we going to pass something off as a legacy to keep everybody happy? It all comes back to financial. How are we going to buy the tractor? How are we going to buy the cattle? And so the problem that we're solving over here is, how can we do that by alleviating loans from the bank, and we control that banking system? So right now, obviously, as we're recording, commodity prices are crap, right?
Mm-hmm.
They are not
right.
good.
It's Harvard.
Yes, I'm talking to my farmers and they're not doing well. The ranchers are fine. They're excited about life.
Oh, yeah. Yeah.
It's always tough.
Life is good.
It's cattle are high, grain is low. Like, it always seems to be the opposite for them. But right now, everything's hard. And they're saying, how am I going to make this payment? And a lot of that comes down to, well, one, if you controlled the loan, you could make the payment whenever you wanted. So you could pay interest only because grain prices are bad right now. If you were the banker and you controlled that loan, you could do that. And that's a benefit of using cash value of dividend paying whole life. You've got 100% control. The other thing that you have to look at is, are you overpaying? So when I'm meeting with a client, I'm saying, hey, what are all your finances? And I just met with a client the other day, an existing client, and he's struggling. And I'm like, well, of course you're struggling, because you have an operating note, you have equipment notes, you have land notes, you have cattle notes. You have a note on almost everything. And so why do we have so many notes? And a lot of times what I'm seeing is we're buying a lot of stuff when commodity prices are great, but we're not looking 7 years out that payment's going to be for 5 to 7 years. Are you looking 7 years out to say, hey, can I still make this if wheat prices go down? So in his case, it was wheat. So if wheat is $3 a bushel or whatever it's at right now, and I still make that payment based on $5 a bushel wheat, And so we're looking at all of that stuff. And it was kind of a fun conversation because when I meet with somebody, I'm looking at what are their finances? How are they handling their debt? What are they buying? Are they avoiding taxes? What's the estate plan? Because for me, it's a 2 to 3 generation lookout. I don't just care about your generation. I want to go further on. And I really feel like your banks don't do it and your accountants don't do it. They look at a 12-month period and go, the accountant says, how can I get you to pay no taxes? And the farmer's like, oh, you're amazing. I love you. Yes, I'll go buy that tractor. Right. And then the accountant or the banker is like, oh, yeah, commodity prices are good. I'll lend you money for that tractor. But even the bankers in most cases are not looking out 7 years to say, oh, is this guy going to be able to pay? Because 5 years in, now the banker's saying, well, Johnny, how you going to make that payment? It's rough out there today.
Right.
Well,
right.
Yeah. And so then the client comes back to me, and this happened years ago, but I still use this line. So the farmers will come back to me and say, well, the banker gave me the money. The accountant told me I could buy it. I'm like, yeah, but who wrote the check? You wrote the check. And so if we can wrap all of that up into your own banking system where you own it, you control it, you can determine your loan payback, you can miss a payment if you want, whatever that looks like. The financial piece of it is huge, and we can do all of that through life insurance as well as leave the estate.
People are looking at life insurance. They just use they hear the word life and they just think, okay, it's just death benefit is all we're getting. They don't think of the big picture. Right. And I'm a big picture person. So looking at, okay, what is our end? You don't want to say goal, but end goal. What do we need at the end of the day? And how else can this help us? Plus provide death benefit at the same time. But you're right. A lot of bankers, a lot of those in the financial industry, they kind of have that tunnel vision and they're only seeing a portion of really what the here and now. They're not thinking down the road. And you've got the ebbs and flows, the highs and lows that farmers are having to deal with. And none of us have a crystal ball to know what tomorrow is going to bring. I mean, whether we get
it's going to go down and we know that it's going to go up.
Yeah.
Right? That's not new. Like
right.
This isn't a new tactic. This is like investing in the stock market and saying, gee, I didn't think that was going to fall. Every 9 years for sure it falls. So
that's right.
We know that commodity prices are going to go up. They're going to go down. We just have to make it through the down. But to make it through the down, we should be preparing when it's up. And we shouldn't be necessarily buying things we don't need. And we shouldn't be buying things to avoid taxes that we don't need. Now, I'm not saying don't buy stuff. Oh my God, that gets everybody's panties in a bunch. You can buy things. I'm not saying don't do that. But when we're buying things we don't need, we have a problem. And so because when times are bad, then we're like, oh, we need to sell equipment, or we're going to need to sell land, or something has to get sold because we can't make these payments. And you would know, I mean, I know you were in the trust department and not necessarily the loan department. But typically what I see is a bank will hold somebody's note over 3 years. So they're like, oh, we're 2 years bad, right? We'll extend that operating. Oh, we'll extend that operating again the second year. You have the third bad year, they're done. They're out. They're like, sorry, we can't work with you anymore. You're going to have to go find somebody else.
They keep crippling you. So if they're going to keep doing that and not looking at, okay, so where are we with your operating plan and what's happening? You just keep buying?
That's my question, because a farmer is their business. It's their business. Don't let your banker run your business. They're crippling you if you allow them to, right? So this is something that I have learned over the years as well, is that we want to blame the banker. And everybody thinks I hate the banker just because of the title of the book. But I don't hate the bankers, man. The bank is in business to make a profit. It's called capitalism. You chose to go to the bank. But if you choose to allow them to run your operation, that is a little bit on you. You should know your numbers. Like, I can tell you just based on meeting enough people over the years. I mean, I've been doing this for 16 years. Based on those numbers of thousands of people that I've met with one-on-one and looked at numbers, you have people that are struggling. They don't know their numbers. They give me their numbers off their tax return. They don't know what a P&L is. They don't know what their balance sheet is. They don't have any of that stuff. They're not running the business. They're farming. There's two pieces, right? So I don't want to be so hard on the banker because we're making, if I have clients, they become really good clients of the bank because they have to manage their finances over here. They got to get their crap together. But the banker doesn't want you if you can't manage your business because you're a huge liability. It's like lending money to somebody. Think about it. What if, how you have those places that sell cars to like people with bad credit? Like the interest rates are like super high. So we understand why their interest rates are high. We're like, well, that person's probably going to default and they're going to get their car back. So that's how that business makes their entire income is they know they're going to get that car back. The bank is like, hey, you don't really know your numbers. So you're sort of risky to me. I'm going to micromanage you because the bank doesn't want the land. They don't want the cows and they don't want the tractors. Okay. They want cash flow. They don't want to have to sell your stuff.
Right.
Because it's a huge inconvenience for them. Now, there are bankers and there are banks, and you and I know some of them, that they will go buy land out from underneath a client because because they're dirty. But, they're not on every corner either.
Well, in most bankers that I've worked with, so, I touched a little bit in the commercial department throughout my years, but I've seen those bankers that they're not big on agriculture. They don't understand the ins and outs and, like I said, the ebbs and flows of what's happening with your business. So as a producer, you really need to know your numbers. You need to understand where your future lies, what you're wanting to do, who your successors are, introducing your successors to the lender as well. But those lenders, I couldn't tell you how many of them have no idea the difference between wheat and durum.
Yeah. Well, they don't know agriculture and they don't know business, Heidi. They don't know how to run a business. They went to college. No. They're an employee, right? It's like accountants. I have a huge problem with accountants. I mean, I'm sure there's some listening and you might be the one in 1,000 I like, but I have a massive problem with accountants because they don't know how to run a business. I had my own accountant. First of all, he didn't know crap about agriculture. He's no longer my accountant. But he said, Mary Jo, you need to pay quarterlies. I'm like, I'm not paying quarterlies. He's like, well, you're going to get a fine. There's a fee or interest charge or whatever.
Yep, late fees.
Late fee, there you go. And that's how much I care about him. I don't even know what to go. And so I'm like, why do I care, Jack? You want me to give the IRS 6 figures throughout the year that I could use to market my business and advertise my business. So that I can sell more books and I can share this with more people. Why would I do that? Because the late fee is like 1%, 1.5%. And he's like, oh yeah. He's like a big time CPA. He's not some little mom and pop shop CPA. He was in Vegas. Massive amounts of clients. Like, I know people that just happen to know him. And I'm like, you can't run a business. Most CPAs know how to fill out a form for taxes. They don't know how to run a business. So you really, as the farmer, you have to understand how to run those numbers, look at those numbers. You should know. And I know that Kirk is like this as well as my brother. They know when I talk to my brother, I always think it's kind of funny. Because I'm like, he knows to the cent what it's costing him per acre to do something, right?
Yep, absolutely.
And he has it in his head. It's like insane that it's not, he doesn't even have to refer to a piece of paper because he's running those numbers all the time. And so as much as you probably hate to do the bookwork piece of it, you need to. But you can't have your own, even if we set a life insurance policy up for you, if you can't understand your money and control your own money, and you've been handing that off, now you become the banker. You literally become the banker, and you have to take loans and you have to pay loans back. Mary Jo is not babysitting you and doing your accounting for you. And so it really, if you're going to use life insurance in that way, you really have to be disciplined, because it's not, you're opening a bank. You don't open the bank and then you lock the front doors and be like, okay, we're good. We're going to just let
tap
the building
out. We're done.
deteriorate, So it's a great strategy, but you have to be responsible.
Right. So I look at it this way. So if you are an entrepreneur, which we are as egg producers, we're running our own business, we're knowing where our numbers are. Shouldn't you be responsible as well and making sure that you get that loan paid back and you're taking the best case scenario for your responsibilities and making sure that you're keeping on top of those things? I couldn't tell you too how many egg producers that I've talked to that they don't do their books every month. Some of them might have, a little bit on the top of their head that they know, but if you're not looking at your books every month, maybe you're going to have some downtime here and there, or maybe during harvest time, your busy times of year, you might not get into the office as much as you want to, but you got to be able to keep, even if you're coordinating with your spouse or a partner or somebody to help you with those books. Also, how many spouses are helping with that and they're not cohesive together and working together on where their numbers are? I could tell you multiple stories that way as well. So they're not talking and then they don't know their numbers, but it's taking control back, right? Taking control from where you're at with your finances, your business, and making sure that you're looking at the whole entire picture. You can't just look at one corner of it over here and say, okay, well, the banker just is giving me money I've got this operating line, so I'm okay over there. But what else can we be doing to monetize our business and keep it flowing better ourselves? And we have that control and growth for ourselves.
Yep. Yeah. It all comes down to money. And I want to address your topic of the wife doing the books, because I always tell, and it's not always the wife, right? But but when it is, this is kind of typical. The husband's not going to listen to the wife who does the books. So he's going to want a piece of equipment. He's going to go to town, buy that piece of equipment, even though she said, no, we can't afford the payment. And he said, we'll figure it out. But he's not the one doing the books. And so I always tell my clients, I'm like, you don't get the say. If you're not looking at the books, if you're not communicating with the bookkeeper, if you think that they'll just make it work, no, buddy, that is not how this works. If she says no, it's no. Okay.
Right.
You don't get the opportunity and then you're mad because you can't make the payment because you're sleeping like a baby at night and she's not, because she doesn't know how you're going to get stuff paid. And then you're wondering why she's maybe a little bit crabby. Okay.
Right.
Well, she's crabby because you don't give two craps about what's happening with the finances and you're making it really hard. And I don't care how those roles are, because I do have some clients where the husband is in the office and the wife is outside working because she would prefer to be outside. You're 100% right. You have to work together and have that open line of communication. But ultimately, we have to control those finances. And because it's life insurance month, the life insurance, like you said early on, life insurance is there. We think it's there for if we die. We have never been told we can use it today and have it when we die. Nobody has ever explained that to us. And so I'm coming in and kind of disrupting the whole industry. And they're like, oh my God, you're a scammer. I get it. But I didn't know about it. I sold life insurance. I was in the insurance industry before I learned this. And I was like, there's no way that this is true. And so if we're having to look at how we do things differently to be profitable, can we recover some of that interest we're paying to the bank back to ourselves?
Right.
And so, and then can we create a legacy? Can we have something and you talk about this a lot in estate planning, can we have something that either we're leaving something to the kid on the farm, or we're leaving it to the off the farm kids, or I sell a lot of key man's type stuff. So you buy a policy on dad, and then when dad passes away, you have the death benefit to buy out siblings or take over or whatever. Because a lot of people will say, oh, dad died, you get the land. So when dad dies, you get the land, all is good in the world.
So when he says
operating,
right. When he says you get the land, is he meaning, hey, I'm just giving it to you, or you get it at a discount?
Well, let's just say that he gives it. Let's just say it's like the nicest parent on the planet, right? Like he's going to give it. Like that's like the 0.001%. They exist.
Right.
But let's just say it's the small case scenario, right? And so you might say, well, what do I need the life insurance policy for on dad? Or mom, because when they die, I get it. I'm an only child. I get it all. Okay, but dad was paying for operating. Dad was maybe making equipment payments. Like dad maybe had cattle that he was feeding. You don't have to buy the land. You don't have to buy the equipment. You don't have to buy the cattle, but you got to plant. You have inputs. Right. You have feed. You have expenses for taxes. You have all of those things. And what's going to happen is you have the land, but you're going to have to go back to the bank for operating. And the banker might say, you know what? I don't have faith in you. Because like you said earlier, I don't have a relationship with you. I don't really know who you are. Dad always had that loan. I don't even know if we want to lend money to you. So kudos to you that you bought it. You got everything, but I don't think I'm going to allow you money to operate it. And I've seen that happen.
Yeah. The bank doesn't have that relationship with you, so they don't know what kind of operator, how good are you with your numbers? How good of a producer are you? Are you making something, or are you just getting by?
Yep.
I talked about this story in my last podcast, so it might be a little repetitive, but I had an estate where the son was farming, dad passed away, and he had all this debt, credit card debt, and plus he had a huge operating line. And after I did the inventory, come to put all the numbers together on how much that they owed, I had to sell a piece of ground. So number one, that family lost a piece of their farm. I had to sell that. How were we going to know how long it was going to take to find a buyer, which, fortunately it was before spring's work. So we were able to find somebody to get in there. But the son, he couldn't go to, number one, there was this land already had a lien against it from the operating line. So he was maxed out. So how is he supposed to operate for his next farming season when everything is all tied up? And it was just a huge domino effect for him. So the quicker we were able to get this land sold and get that debt paid off, the lien released, then, he could be able to mortgage what he had on his side to do a loan.
Didn't have they had no life insurance in that estate?
No, absolutely no. I know, absolutely no life insurance. And it was
I don't understand that. Like, you're going to be the best estate planner ever, or whatever you call yourself.
Estate succession. Yes. Okay.
You're going to be the best because you understand the importance of life insurance. And that somewhere got lost after the 80s. And there is a gentleman, he was 80 some years old when he spoke at one of my conferences years ago. His name is Val Farmer. And he used to do a lot of stuff in the 80s with mediation with families and that sort of thing. He was kind of a Jolene Brown to some extent. Yep. And I asked Val at one point, I said, why don't they do life insurance? And Val said, Mary Jo, in the 80s, it was a big thing and it's not anymore. He goes, I don't know why. I mean, think about a simple life insurance policy. And you have said it before. It's a guaranteed need. You want a guaranteed product. So you want whole life, not universal, not variable, not indexed. You want a whole life product. You don't want term insurance for that. You want something that this family could have saved that ground.
Absolutely. Yeah.
And you don't know when people are going to die. So for the love of Pete, don't wait until you're 65 and go, Mary Jo, can I get some life insurance? Yes, I can sell you some life insurance. The death benefit in today's world with how expensive everything is per acre, it's not going to be enough, but to maybe have a down payment on something. So get it now. And people are so scared because they're like, oh, it's so expensive. It's expensive if you don't understand what you're buying. But it's like I tell a lot of people, and I talk about it in my podcast, life insurance is not a luxury. It is a necessity, and it should be part of your farm expenses. It is just like fuel. It is just like seed, fertilizer, chemical, feed, whatever it is you're doing. It is the exact same need. So put it in, build it in as your expenses. Because if you can't, then you know exactly what you need to sell that wheat or that corn for per bushel to cover that expense. I don't understand where life insurance became a luxury because you're gonna die. Like nobody gets out alive.
But that is the scariest part in my job. What I've seen over the last 22 years is nobody wants to talk about death, but it's inevitable. We don't have a crystal ball, but we're all going to die. It's just that we just don't know when. But why wouldn't you best prepare for your family and your business? It doesn't matter if your business is you're a bookstore or you're a farmer or rancher. You're still an entrepreneur and a business owner. So why aren't you protecting that, protecting your family? I just think about at the end of the day, how much they're stressed enough during that time, mourning and everything else. And now on top of it, we have to sell commodities at the low because we need operating expenses or to pay operating expenses, or we have to go sell a piece of property for this. And this gentleman that sold, it was over 160 acres. So that was a huge part. And that was the prime farm ground. Not to mention they had a grain bag on there and the family was just, I don't know where their mind was, but they could have the wildlife got into that grain bag and they rotted. So it was all garbage. If they would have gotten on top of things sooner, they could have better managed their numbers. And that's when we talk about managing your numbers. Sometimes it's not always just the bookkeeping side. It's everything on your farm and making sure that you're keeping your thumb on top of things. But if you don't have life insurance, and that's where people are always thinking that, well, if I talk about it, I'm dying.
You're dying anyway.
You're going to die. You're going to die. You're going to die.
Talk about it or not, you're dying. Like every day you're closer. I mean, I don't know what to tell you, but I do want to address your comment about the mourning piece of it. And I've delivered about 7 or 8 death claims now. And it is, everybody mourns differently, right? Some people completely shut down. Some people are really, really good until things slow down after that process. And then it'll catch up to them a few months later. But all in all, it does not matter if it's a wife or if it's a husband. I don't care if I have a widow or a widower. It takes 1 to 2 years to move through that mourning process and really kind of get your bearings back about what do I do? So when we're leaving, when people come to me, they're like, oh, how much death benefit do I need for our debt? I'm like, I frankly don't care. I do not give 1 iota of care to how much debt you have. I want your spouse to have enough death benefit that she can have years of payments available and she can take years to just make payments on some things, because what she should not do is pay stuff off. So here's an example. I have a client who her husband, I think he died. Did he die during COVID maybe? Anyway, she had this death benefit from him, right? It was about $300,000. So she's got this $300,000, but he was still farming. And he's like in his late 60s. He was still farming. So she is like, well, Mary Jo, the bank is telling me to pay all of our land off so I don't have any debt. Her debt was like about 280, 300. And so then financial advisors are saying, oh, you should be using some of that money to put it into, investments or whatever.
Annuities
and then you'd
or
be
something.
talking to other people and they're like, pay all this debt off. And I'm over here saying, absolutely not. Like, I don't know that I want to put it in a life insurance policy for you. Like, we have to really sit and think about this. You just lost him within the last year. Like, mentally, she still was struggling, right? And everybody's trying to give her advice. Like, everybody just needs to shut up when they're talking to a widow. Like, the vultures that come in and want access to that money is insane to me. So anyway, I said, please don't pay that debt off. I said, what happens? Where are you going to get the money? She said, well, I'm renting my ground out, and she was playing an Amish Uber. Okay, so she drives Amish people around. So she had those are her only two sources of income. And I'm like, okay, how much is that? That was not even enough to pay her living expenses for a year. So I'm like, you can't pay that land off. If you want to, great, do it in 2 years from now, but you don't have to do it now. You are 2 years into this. This is not a time for you to be making massive decisions. And it was funny because I was talking to a friend about this mourning process just last Friday. And she has lost her sister. She's lost her dad. And so she's had some pretty traumatic stuff. And she went to a grief counselor, and the grief counselor said it takes 2 years to get through the mourning process. And I was like, oh, that's interesting, because that's exactly what I see. Right. Yep. And the life insurance piece, I want your family to be able to say, I'm not renting ground. I'm not doing anything. I have enough money to make a payment, but I have to mentally, physically, emotionally take care of myself. We have to take care of the kids. Because the kids are now like, hey, what happened to dad? Right. Or I have friends that I have a friend, his wife died and the kids were in college, and he was constantly at the college trying to help his child mourn through the process of her mom dying. They're college age children. So it's not like maybe as they're older adults that reverses, right? But when something happens tragically, and now all of a sudden you're 45, 50. I had a 27-year-old that passed away of a massive heart attack. So that you're not preparing. There's a lot of stuff. The insurance company actually says, and this is an interesting number, because the insurance company says if you are 40 and under, you are worth 30 times your gross income. So let's say you make $100,000 or you make $1 million, you're worth $30 million. It's not hard to have $1 million gross income for farming.
Right.
So most people would say, I don't need to leave them rich. $30 million? You're not leaving them rich. What the insurance company is saying is you should have lived another 30 years. And so this is what you need per year for the next 30 years to live.
Right. That loss of income.
Yes.
Loss of income.
But we're over here thinking, oh, we just need to pay off our bills. No.
Yep. They're not looking. That's the whole big picture point that we talk about is you're losing that key person. You're losing that loss of income, all the other expenses and income that goes with that. You can't just pay off debt. You have to look at the futuristic for income and so forth for you, because you still need to live and make it. It's interesting that, with this whole being Life Insurance Awareness Month and people not thinking of this because they, all the things they want to think about with life insurance and death and planning and so forth. But, it really is an important planning tool. And if you never plan, you fear, I don't have to think about it. But if you don't plan, if you have family or business partners, what are you leaving with them? What kind of burden are you leaving on their shoulders in your absence?
Yeah. And plan to die at 90, 85, 90. Term insurance is going to take you to 80, 85 at the most. And so people are like, oh, well, I'll probably die before then. Yeah, and you may not. How do you know that? And so if you run out of insurance for term, now you have nothing. Oh, but Mary Jo, I'm 90. They don't need to have a death benefit. Oh, because why? Who's going to bury you? There's got to be something there. Oh, they can sell land. Oh, yeah, that's what they want to do is sell land. Guess what? The funeral home says, I need that money before the funeral because we're not doing this funeral until we get the check. Because they're not government funded. Okay?
No.
It is, somebody's got to put you into ashes or put you in a coffin, whatever that looks like.
Yep. You're getting a pine box.
And even that costs money. And so it's a matter of it's just amazing to me how many people will say, well, you just want to sell whole life insurance because the commission is bigger. No, I want to sell whole life insurance. I actually make more commission on term insurance, by the way, than I do on whole life insurance. But I want to sell you permanent whole life that is going to take you to 121 years old because statistically, according to the actuarial tables of the life insurance companies, our insureds are living 80 to 85 and 90. Policies used to go to 110 when I started this, and now they go to 121. And that's because people say, oh, everybody's living shorter lives. And I actually asked the insurance company this. I said, I don't understand. I asked the head actuary. I said, I don't understand how everything I'm reading is saying people are living shorter lives, but you guys are extending your policies because you say they're living longer. So can you explain that to me? And she's like, yeah, because the people, we underwrite them for health. So statistically, they will live to 121 because we're underwriting healthy people, right? They're not insuring people that aren't healthy. So as a pool, they have a lot of people that could very well live past 105, 110. And we're seeing it. Think about life insurance policies that used to go to 95 or 100. People are outliving those on a daily basis. You don't even get a birthday party at 100 anymore. Remember when that used to be on TV? Oh, Irma turned 100 today. That's
right.
fun. We had a party for her.
And you got a cup.
Yeah, yes. I totally forgot about the cup. The noon report would show who's 100 today, right? No, we're lucky if Irma makes the paper at 100.
That's right. That's right.
She might make a Facebook post because the family's excited about it.
Right.
But a lot of times, you're not even hearing about it anymore.
No, because, naturally, technology, medicine, everything else, people should be living longer. Yep. And we're not working. Yes, we are working, but we're not working manual labor like what our ancestors, our grandparents were doing. So you're not breaking down your body and much healthier. But you're right. I mean, so having that life expectancy out there and buying that insurance at a cheaper rate when you're younger instead of waiting until you're older is don't wait to plan. And it's just like with your estate plan and so forth. It just all comes in because you can't wait. If you wait, it's going to be too late and it's more expensive because you have all those what if scenarios that you catch you with your pants down, basically. So one thing I just want to touch quickly on, and we're going to have to wrap up a little bit, is you mentioned one of your clients that was mourning and it was in college and a family member had to go there. And so one thing that would help take the burden off, and you're aware of this because you've heard me talk about it, but for our listeners, is you can put life insurance in a trust. Put life insurance in a trust. And that's a whole nother podcast that I will be doing later this month. But put it in a trust. You could still go be with your family members and help mourn, but that trust can be there to help that family member pay those bills, those expenses. That trustee files the claim, gets the death benefits, and takes care of any of those items. So that way family members don't have to deal with that. And, the trustee could be a bank. It could be an individual. There's many people you could have as a trustee. But that's something too that more and more people are working into, is having an irrevocable life insurance trust. So that's a good tool to put policies in for their heirs, beneficiaries, other family members, and to be able to control those funds on what they're able to use them for. But we could talk more about that later. But
and in this situation, I think the child needed the help mourning, but dad was very fortunate that his company didn't fire him for being gone so much, because he was gone a lot. And that was before the days of remote work, right? That was far before COVID. And so you really had that he was gone. And now if he would have gotten fired, that life insurance policy would be very important for him to be able to kind of get back on his feet and make sure that the kids were okay. And then he's okay, because if he's looking at the kids and helping them mourn, he's not mourning himself. So once the kids mourn, then dad would start to mourn. And that process is going to start much later, because he's too focused on kids. And it doesn't matter if it's mom or dad or whatever. That, and you know as well as I do, that mourning process has to happen, because if it doesn't, we have a lot of emotional issues later. And that's anger, or it could completely destroy a family. And because we've never mourned our loved ones passing. And so we really need to make sure that we have the stuff, that we have the finances in order, the trust, the plan in order, so that we can correctly do that, because it is an awful situation.
Right. And no one wants to put their families through that. You want to be able to mourn it and spend time together and not have to worry about all the other things. So
and most people don't think about it. They're just like, oh, no, she'll marry somebody else. I'm like, oh my God, don't even.
Yeah, no, we're not even thinking about that right now. We're thinking about, we don't want to worry about finances. Right. We're not going down that road.
Right.
All right. Well, a lot of very good information today, Mary Jo. I'm sure we'll have you on again as we have other topics and so forth to cover. But if listeners want to reach out to you, they want to buy your book, how can they reach you?
So you can go to farmingwithoutthebank.com. You can get it there. I'm everywhere except X. So I am on TikTok, Facebook, Instagram, YouTube. If you go to YouTube, it's Mary Jo Irmen. It's not Farming Without the Bank. So I sort of have a branding issue, but outside of that, just type in Mary Jo Irmen and you'll find me.
Okay. All right. Well, we'll make sure that those links are in the show notes below. So any last piece of advice before we sign off?
Get your trust done, people. What you waiting for?
That's right. All right. At the end of the day, the right policy puts dollars in the right bucket at the right time. So your plan, not panic, decides. Thanks for joining me on the Pathfinder Legacy podcast. If you found today's episode helpful, share it with a friend or a family or business member. And if you're ready to start the conversation, let's talk. Book a 30-minute discovery call. You can connect with me at pathfinderlegacy.com. Until next time, I'll see you between the ditches.
Thanks for listening to the Pathfinder Legacy podcast, where your future is our focus. Be sure to subscribe, follow us on social media, and visit us at pathfinderlegacy.com to start building your transition plan today.